So, Jonathan, hello. Thank you for that. You should just see the Ninjatrader trading platform along with a little slide, PowerPoint slide here, introductory slide, we'll call it. Anisha, good to see you. Thanks for coming. Looks like the YouTube live people have kicked in. Facebook hopefully is going to kick in. And we're going to go ahead and get started here in approximately 3 minutes, maybe a little less than 3 minutes. It's almost the afternoon for me. It will be in 2 minutes, a little over 2 minutes. If we can get a visual sound check from the YouTube folks too, that'd be great. And I know we'll be off to the races. And to get started right on time. Hopefully everyone's having a great day. I'm ready to go. I mean, we had a good event this morning, live trading event. Ranjan, good morning. Sorry if I pronounced your name wrong. My apologies. I'm not very good at names, but thanks for being here. And appreciate you chiming in. Craig is here. Awesome. Thumbs up. The big K icon on his YouTube picture. MA, excellent. Excellent. I agree with you. Excellent. So this is event 2 of 2 today. We did the live trade setup event earlier this morning. And we do those Tuesday, Wednesday, Thursday. Everybody's welcome to come to those. Well, you can come to any of the NinjaTrader webinar events. We'll get you links up here in a little while so you can see how to see the schedule. Craig says, I'm short at HOD. How do I get out? Hate this mixing back and forth. This has been unusual for sure, especially stock index futures, currency, the crude oil also. It's just been very, very interesting. We had some positive news out of OPEC Plus today as a side note about continuing with its plans to increase output in January. Everyone was a little worried about that for a while, but it seems to be a positive development. Facebook is here, ZenTrader. Awesome, thank you for that. I appreciate the assist, Isabella. Let's go ahead and get started here. For those of you who are new, my name is Jim Cagnina. I'm a senior education and training specialist for the NinjaTrader Platform. Today's special event is Futures Trading 101. For new traders, although you don't have to be a new trader. You could be trading anything maybe, and you're curious about the futures markets and why are they different? Why are they unique? And what's the upside? What's the downside? Maybe you have those questions, which is great. Or you're new and you're just kind of figuring it out, right? You're trying to go through the process and learning how to go. So you're in the right place. Any questions are on the table. Feel free to go ahead and type them into the various chats, and we will do the best we can and pick them off on the fly as we go. I do want to remind everybody before we start, trading futures, options on futures involves substantial risk of loss, not suitable for all traders and investors. Oftentimes in futures trading, you have a high combination of leverage and volatility, although that could be an equation for opportunity. It's also an equation for risk, so be careful. Only fund your futures trading account with a risk capital. My personal definition, for those of you who know me know it, but I'm going to say it again anyway. Money I could afford to lose doesn't change my lifestyle, doesn't lengthen my retirement horizon, and doesn't overly stress me out. Because when I'm under stress, I make bad decisions. So in any event, easy on the day trade margins. And we're going to talk a lot about margins today and kind of get into it. I'm going to use the trading platform here to tell the story. I'm logged into a real-time simulated live account. with the Ninjatrader platform, with the real-time data feed. And you got, we'll talk about all these different components here that you see on the screen. It's really not complicated. It's really more straightforward than you think. And hopefully once I'm done today, you will join me in that opinion. I'm Bartlett. Hey, good to see you. Pam as well. Pam is here again today. Thanks for coming. I'm glad you guys are here and everyone's found the question box and we're good to go. So I don't have a PowerPoint for this, which arguably is a good thing. I could hear people applauding right now. Sometimes the PowerPoint presentation is like, whoa, what? Kind of boring. But so we're going to start from the start. We literally, trading's been around forever, right? We remember our high school history. The Greeks and Phoenician merchants, developed these trade routes in the Mediterranean to trade stuff, right? Buyers and sellers were getting together and coming up with what they thought were fair trades, right? And this has happened, way back in history. And to get a little bit closer to where we're at now, maybe the first official exchange, arguably, would be the Royal Exchange in London, and that's 1571, right? I don't know, what is that, 500, 600 years ago, a long time ago. That's maybe one of the official. I don't know if it's officially the first one or not, but fast forward another 100 years or so, and you get the Dojime Rice Exchange, Dojime, Dojime Rice Exchange in Japan, 1667, and you might recognize the word doji from that name, and that's where the word doji, kind of originated from. Candlestick charting is what you're seeing on my screen right now. Is derived from way back then, right? This isn't new. This isn't brand new idea. This has been around a long time, this type of charting, and everybody uses it. At least not I don't know if everybody uses it, but a lot of folks use it. I do. Let's fast forward to 1848. Chicago Board of Trade creates the first futures exchange, and within, 20 years from that date, they developed the first octagonal futures trading pit. And then in 1898, the Chicago Butter and Egg Board followed suit, which was the predecessor of the Chicago Mercantile Exchange. And then going a little bit further in time on my timeline here, in early 80s is when I started on the floor of the Chicago Board of Trade. I was in the U.S. Treasury Bond Futures pit before any online trading opportunities really were available to anybody. Way back in the day. And back in the day, it was not a retail trading market, right? You'd have to, if you were sophisticated enough to know, you would have to open an account with a brokerage firm. And then when you're ready to fund that account, and then you would go ahead and place an order. You'd call your broker. The broker would call the desk on the trading floor. The fella or the lady who answers the phone writes down your order, timestamps it, hands it to a clerk or a runner. That was me. And I'd run over to that, to the pit, whichever one was applicable on the floor, and hand it to a broker that was standing on the outside of the pit. And he'd look at it and, tend not to ignore me, but he would look at it, turn around, give it to the filling broker who was on the top of the pit. And the filling broker then would go ahead and execute a trade with whoever was willing to make the trade within the pit, and then would write down the trade. Turn around and give a piece of paper or a trading card to the broker behind him, who would hand it to the clerk or the runner, would run it back to the trading desk, and then the trading desk would call the broker and say, hey, your client got filled at XYZ price, or we were unable to fill the order at XYZ price, and then that broker would call you at home. That whole process sometimes took a minute, and sometimes took several hours, right? How frustrating would that be? Not to get a fill for 7 hours. You don't know if you're in a position. You don't know what your price is. So it wasn't really conducive to retail trading, and certainly not online. But then things started to change. 1982, the CME Group did first establish the first stock index future, right? This is the S&P, the big S&P 500, not the E-mini that we're used to now, but the big S&P 500 stock index future, 1982, and that soon became the largest pit in the world for a while. And then 10 years from that point in time, 1992, finally, the first electronic futures trades are made on CME Globex trading platform. And that's the platform that's kind of evolved to what we see today, and where a lot of these trades are executed. I'll talk more about the CME Globex electronic trading platform a little bit later. Let's kind of go 5 years forward here. 1997. Now, this what CME created the literally the E-mini S&P, right? And it expanded the amount of participants that could participate. Retail traders could participate. Now we have the internet. We're logging in on our AOL, accounts, through our phone lines, and we find, electronic platforms were starting to develop. Charting software was starting to develop. But now we have a smaller size contract where we could fund, where regular folks, including me, I think I'm a regular folk, could fund with a smaller size account, and then participate. Not only participate, but also participate in a way, in a fair way, right? Orders could be sent electronically going forward, and then orders are received on a first in, first out basis. So you weren't sidesteps, so nobody cut in front of you in the line. So that was a pretty big innovation in '97 with that product. 2002, CME goes public. 2007, they merged with the CBOT. 2008, they acquired NYMEX, COMEX, and all those other kind of sub exchanges, which still exist today. But where the really most amazing innovation, I think, is the micro E-mini S&P stock index future, and that's the chart you see on the screen right there. And that was May 6, 2019. It's a relatively new contract, 2019. It's only 2021 right now. But not, at this point in time, retail futures becomes accessible to just about anybody, right? You could fund a futures trading account with hundreds of dollars instead of thousands of dollars. You could express your opinion on a day trade basis or on a position basis. You can hold positions for long periods of time. And the CME has developed a lot of volume around these markets, a lot of notional value around these markets. We'll talk a little bit more about that as we go forward in today's presentation. Hang on 1 second. I got a couple examples here I want to pop up for us. All right. Any questions, feel free, again, type them in as we go. I'd be happy to. That's kind of a brief history, but it's how we got to where we are today. And I'm going to really use the rest of the, thanks, Joseph. And that's the story. And my career personally has kind of evolved into the online and the brokerage side and onto the trading side. So that's where I'm at personally right now. Ninjatrader Platform. Now, I've used, in the course of my career, I don't know, not every single trading platform out there, but a lot of them. From 2001, we had Ran Order and JTrader and Strategy Runner and Photon Trader and all these different types of softwares that came out. And Ninja came out early in the 2000s. I was actually a broker at a different firm, and I kind of reconnected with the Ninjatrader platform, and I went from another platform to, wow, this one is really good. This one is really, I think it stands above the rest in terms of ease to use, functionality. It's a developer platform as well, data feeds, trade execution, and all that stuff. So we're going to focus on that today. I have my this window here. It's all modular, right? So you could create your own personalized workspace. Maybe you have more than one monitor. Maybe you have only one. Maybe you have four. And the way it's set up is you could really create your own environment. On the second window here, the Superdome, Ninjatrader Superdome, we're going to talk about that. This is also known as a direct access level 2 look at the market. It's a trading ladder or depth of market ladder that's does a heck of a lot of things right now that you wouldn't even know by looking at it. And I'll talk about that. Quote board on the right-hand side called the Market Analyzer, very highly customizable as well. And finally, a chart, right? And this is, I just have one chart I'm showing. I got other charts on other screens right now, but for presentation purposes, we're going to focus just on this one monitor that I have showing. Joy, could you not see the charts right now? Is that something you cannot see? Joy asks, is he going to show anything or just speak? I know most people don't want to hear me talk too much, but I am going to show something, and we're going to talk about what we're looking at right now, which is the actual platform, and then we're going to kind of tell the story of why futures trading, in my opinion, is better than other types of similar markets, cash markets, and that kind of thing. Okay, good. All right, so let's take a look at the Superdome first. This is really where the rubber meets the road in futures trading. You don't get this. You don't get this really in any other type of market, right? Any other kind of centralized market other than the futures markets. And what it does is, I'll just keep it to the side here where it was. It's a price ladder, right? And in the middle are prices, and you can see there's a yellow label that's bouncing around, and the yellow label is telling us where the last traded price was in this market. In the market we're looking at, it's called the micro E-mini S&P. It's an S&P futures. It's an S&P 500 stock index future. It's very popular. It has a lot of volume in it, and the price right now is, let me freeze the zone for a second. 45.79 and a half, right? And that's that flag is telling us where's mark to market, where's the latest price, and that's where it's at. Each increment is the smallest price increment available in this particular market, and those are called ticks, right? We call them ticks. If you're a Forex trader, you might be familiar with the term pips. Same thing, pips, ticks, same thing, but we're going to call them ticks. And you can see they go up in quarter point increments, right? So 79.50 to 79.75 to 80 even to 80 and a quarter. And each one of these ticks has a price, has a value per contract traded, right? We trade contracts. We don't trade shares. We trade contracts. And each contract in this particular market is worth $1.25, right? There's a big brother S&P contract called the E-mini S&P contract, not the micro E-mini S&P, but the E-mini S&P, where it's 10 times bigger, and each tick is worth $12.50 per contract. So the math is multiplicative. It's a 1 to 10 ratio on those two particular markets. And what I'll do is I'm just going to right click on the top of my Superdome to duplicate the window. I'm going to pull it over side by side, so we see two trading ladders side by side. And I'm going to go ahead and add the classic E-mini S&P by going down to my instrument selection at the lower left and changing it. So now I have ES, which is the E-mini S&P, on the left-hand side. And on the right-hand side, I have the MES, the micro. And you can see the prices are identical nearly, right? It's 100% correlated. You might see a momentary, a lapse where one's a tick higher than the other, but that corrects itself immediately. So the basis of this market is the exact same. And so in this particular market, each tick is worth $12.50. And in this one, it's $1.25 per tick. And every market's kind of different. So crude oil would have a different tick value as an example. Gold would have a different tick value. Silver would have a different tick. Treasury bonds would have a different tick value, and all that stuff. But the important takeaway here is each price increment is a quarter point. That's the smallest price it can be. Now, you'll see a series of numbers on, I'm going to go ahead and close the duplicated Superdome here. On the left-hand side, I'm going to refer to the bid column or buy column. On the right-hand side, I'm going to refer to the offer column or sell column, right? And when I freeze the Superdome, we can kind of look at these numbers. On the buy side, you'll see a bunch of numbers, 24, 75, 47, 46, next to each different price point. And those represent contracts, limit orders that have been sent to the CME Globex Exchange for execution. There's some traders down here, let's say at 45.79. There's 80 contracts waiting in the CME's order book to be filled should the market go down to 45.79, right? And these 80 are sent on a first in, first out basis, or FIFO. Totally fair. It doesn't matter if you're a hedge fund, an institution, a commercial trader, a retail trader, an algo, a system trader. It doesn't matter. Your trade's going to get to go. By the time you send it there, you're going to be in line behind other contracts that were waiting to be filled by various traders. So this, on this side, think of it as on the buy side, people want to buy, or entities want to buy contracts at these various prices. And on the right-hand side, it's the opposite. People want to sell at various prices, right? And the seller's prices are higher than the buyer's prices. And you can see the volume 10 ticks deep on the buy side, and you can see the volume 10 ticks deep on the offer side or the sell side. And this is called a level 2 view For those of you on the equity side, you might recognize the term NASDAQ level 2 view, but this is a level 2 view where you see the depth of market. That's why DOM, depth of market, comes into play. And I'll go ahead and just release the dome for a second. And you can see it's moving around, right? The bids and offers are changing, right? People are adding to their bids. They're canceling, replacing orders. It's very dynamic. They're changing their mind. All this stuff is happening in real time, and literally the data is measured in milliseconds these days. Most depending on your internet connection. Hopefully, you have a good one. It's just incredibly fast. Remember my old example being on the floor, where you might wait 4 hours before you know if you got if you're you were filled at 45.79. Here you're gonna know right away. Right here you're gonna know right away. So this is kind of a unique thing because right now I'm looking at the entire market. It doesn't matter if you're a trader in Japan, if you're in Australia, if you're in Sweden, if you're in Brazil, if you're in Honolulu, Chicago, North Carolina, we're all seeing the same thing. It's transparent, right? We're all seeing the same thing. We all have the same information, and we're all able to express opinions in the market by placing trades based on that information. So when I talk about fair is kind of a weird word because what's fair to me might not be fair to you. It's subjective, right? Fair is kind of a subjective word, I think. But in this particular context, everybody has the same opportunity, I guess is what I would like to say. Everybody has the same opportunity. In any event, Andrew, good morning. Everybody who's saying good morning, thank you. I appreciate that. Rodfather, not yet. We're working on that. Yeah, we'll go over Ranjan. We'll go over volume profile for sure. No worries. So this is kind of, so again, unique to futures trading. You don't have to be a pattern day trader to have this, right? You don't have to have a $25,000 account minimum to have a direct access level 2 view of the futures markets. That's kind of an important point. And with the micros, remember, you could trade most brokerage firms are going to let you fund with hundreds of dollars instead of thousands of dollars. If you would like to trade the smaller size micro contracts, you may choose to trade the bigger size, just regular mini contracts that we talked about earlier. It's up to you and based on whatever strategy you want to employ. So that's the trading ladder itself, and you can trade from it as well. So as an example, and this is why it's called a trading ladder. So it's if I wanted to send an order in to buy a contract at let's say 45.79, I just I want to buy one here. I'll just click in the buy side, and it'll send this limit order. You'll get this little notice back saying, yes, Jim, I'm in a simulated account right now, but if this were a live account or even with a sim account, you're going to get this little flag here. It says, yes, you're trying to buy a contract here at 79 even, and I'm in line, right, behind all the other people there before me, all the other contracts, right? And if the market comes down to 45.79 and starts trading there, I get closer and closer to the front of the line until one of two things happens: either I get filled, or the market then just rallies back up higher and I don't get filled. Right, market can't go to 78.75 without giving me my fill. So in essence, I'm blocking it. Right, you can't go any lower than 79 even until I get my contract, until I buy my contract. Right, same thing on the sell side. You just want to pick a price and you just click the mouse, and you would have sent an order into the exchange waiting to sell a contract at 86.50. It's really that easy, single click. If I want to change my mind, I could just go ahead and just kind of click and change the price. If I want to cancel it altogether, I could hit the X. And I'm just showing a fraction of the functionality here on this particular market. But as you can see, it makes it really easy, nimble, and a quick way to enter orders. Again, unique to futures trading mostly. So some of us have experience with options platforms and have experience with just regular order entry platforms, which can kind of difficult to arrange. And on the forex side, in the cash forex side, you almost never see bids and asks this deep like this, because forex is the over-the-counter forex business is mostly done by a whole bunch of independent entities. Right, this is one publicly traded global exchange, recognized exchange. Maybe the most recognized exchange is the CME Group. And keep in mind, because of this publicly traded entity, highly regulated, highly controlled, and legit. It's about as legit as you get. And no one's selling order flow here, right? We're not taking this trade and selling order flow to a broker. It doesn't work that way. Orders are routed to the CME group for execution. So it makes it, again, fair and efficient. And then the bid-ask spread tells the story, right? And when we talk about the bid-ask spread, the bid-ask spread is the difference between the highest bid, the highest price someone's willing to pay, and the lowest offer, the lowest price someone's willing to sell. That bid-ask spread, the tighter that bid-ask spread is, the cheaper your trade is, right? In this particular case, it's $1.25 difference. So if the bid-ask spread were 2 ticks wide, then it would be $2.50 difference. So the tighter the spread, the more volume, the more liquid, the better off you are in general. Any questions on that? Let me know if I'm going too slow, too fast. You want me to fix my chart, which I'm going to do right now. We're in an incredibly unique time in the market right now with the incredible volatility that we're having. And we'll talk maybe a little bit more about this later on in the present. Oops, I'm sorry, let's cancel. Oh, by the way, on the Ninjatrader platform, you could trade from the chart as well. And everything is kind of mirrored or mimicked, right? So if I place a trade here, it's mirrored on the chart. If I just drag it down to a different price, it'll drag it down to a different price on these two things are in sync is what I'm trying to say. Not very eloquently, I apologize for that, but they're in sync right now. I cancel it here, it cancels on the other side, and it makes it really easy. A couple last things about the trading ladder itself. It's easy to configure. You could change instruments. You can create tabs at the bottom, which allows you to toggle between different markets. You could change your quantity, and you could literally add strategies, automated trading strategies, which could be very simple or could be very difficult, complicated. And this does a heck of a lot more than just we won't have time today in the presentation to do this, but there's all sorts of automated trading processes where you could submit, order triggers other trades, order cancels other trades, trailing stops, and all that kind of stuff that you can get a little bit advanced with if you want. Okay, Pam says, do you have to use a mouse with a wheel to use the dome or use your laptop? So, all right, so here's the deal, Pam. So I'm just left clicking to place the order, right? However, if I want to place a stop order, right, when I place a stop order, I'm going to use my middle mouse button, right? My middle mouse button. So I would just literally use my roller on my mouse, and then I would just kind of do it that way, right? So that's the one time you would use the middle mouse button, and it's literally called the middle mouse button. So on a lot of, even if you don't have that little roller in the middle of your mouse, you probably have a middle mouse button. Hopefully that answers that question. So it just depends on how your keyboard is set up and how to access that functionality for the middle mouse button. And I think you could just on just about any device, but I'm not an expert on that. Okay, Griffin's still trading through my 101 presentation, flat at 85.25. This is, like I said, it's been a crazy market. All right, let's keep moving forward here. So any other questions on the trading ladder, let me know, because I want to move over to the next window, which is this thing here called the market analyzer. And by the way, these are all highly customizable. You right click anywhere in Ninjatrader and you're going to get this mini menu, right? This menu box that appears, and you could add columns, you could add instruments, and you just click and you could add any of these as a column, any of this type of information on the column on your market. It's called Market Analyzer, but because it does so much. But I'm just going to refer to it as a quote board for today because it's easier to understand that way. Okay, way I have my quote board lined up is I have the stock index futures on the top, right? And there's a bunch of them. There's several benchmark stock index futures, the S&P 500, which is called the E-mini S&P, the E-mini NASDAQ, which is the NASDAQ 100, the non-financial stocks. There's 100 of them. You might be familiar with some of the bigger ones in that particular index. The Russell 2000, which is basically small cap stocks. That's RTY. That's the symbol there. The Dow Jones, which is the original stock index future that's been followed for decades now. And then I have a couple of German through the Eurex exchange, which is a little different than the CME group, but it's based on the same principles. We have the Euro Stock 50 stock index, and we have the DAX. I have here stock index futures too. I like to look at those as well. Underneath it, I have the way I have my quote board set up. I have the micro indexes set up, right? So I have the smaller size contract, the little brother contracts of the bigger ones. So the MES is the micro E-mini S&P, a large cap, MNQ, micro NAS, MYM, micro Dow, and M2K is the micro Russell. Now, one of the things I want to point out is the volume column here. So we see a volume column here. For the ES as an example, we've done our over 1.5 million contracts have been traded already today. That's a huge number, right? That's a huge number. Not typically this high, but it's typically very large. NASDAQ has done, the E-mini NASDAQ has done almost 600,000, and then all the rest of them have done a little bit less. The micro stock indexes are equally as impressive. For instance, the micro NASDAQ has traded 1.2 million contracts already, and the regular and then the regular the older E-mini, the larger size contract, has done only 50% of that volume. So these are really good numbers. The more the volume, typically the better the deeper the market, the tighter the bid-ask spreads, the easier typically it is to get in and out of positions. Currency futures, let's talk about that for a minute. So I have the dollar index in this category. This isn't really a currency pair, this DX that I have here. This is a dollar index. It just tracks the US dollar versus a basket of other international currencies. That's all. So when I look at, hey, what's the strength of the US dollar today? Is the dollar going up and going down? And instead of comparing them to each individual currency pair, I could just look at the DX or the dollar index and kind of figure out, okay, so the dollar's up 135. Each individual cross, though, you have all the major crosses, right? The Aussie dollar, the British pound sterling, Canadian dollar, Euro FX, Japanese yen, New Zealand dollar, Swiss franc, on down the line. You even have like the Mexican peso and some of the non-major currency crosses here. And it's always the foreign currency versus the US dollar. So in the Japanese yen, it's the opposite, right? And over the counter Forex, you'll see the US dollar versus the yen. And I think that has to do with having to deal with the decimal point. A lot of platforms and over the counter currencies maybe can't deal with the decimal point on there. I know it's a lot of zeros, 0.0000, but that's the only difference really. So why would you trade this over the counter Forex? Well, I don't know. I mean, I think this is one transparent, regulated exchange, right? You see you see everything everybody else sees. If I opened up 4 different over-the-counter Forex platforms, my guess is you see 4 different bid-ask spreads, right? And maybe the Forex provider, right, the brokerage firm that's providing the platform that you're trading on, has good intentions, is using a good strong EBS feed, but then there's some kind of algorithm that's going to adjust the bid-ask spreads to offer to you, so that broker could somehow try to make some money as well. So again, there's a middleman there that you're not getting with this particular platform, and you're going to get global recognition on pricing. There's micro Forex contracts, which are smaller size contracts, just like the micro stock index futures. The energy complex, this is another asset class, right? We have crude oil. I'm just showing the WTI crude oil right now, which is a benchmark market. You could trade a Brent crude, which is another less light sweet, but it's another benchmark market. The Dubai sour crude, also you could trade as a future. And there's a micro crude oil I have on my quote board. I have natural gas. I'm tracking natural gas on my quote board. Ultra low sulfur content it used to be called heating oil, is another contract, another market that's very popular. Metals. So we have gold. We have both precious metals and industrial metals: gold, silver, copper, among other ones. So I have the popular ones up here right now, and there is a micro gold contract. And if you could see, even the smaller size gold contracts already traded 43,000 contracts today, which is pretty good. Then treasuries, you have the entire yield curve. So UB, Ultra Bond, ZB 30-year bond. This is where I got my start, right? This is where the pit I was in. We're doing about 309,000 today. And this predates the UB, the Ultra Bond. Ultra Bond is relatively new. It's a true 30-year bond, right? The ZB is a 30-year bond too, but the average maturity could be as low as 26 or so years. And then a 10-year note. You could do a 5-year note, a 3-year note, a 2-year note, and the Fed funds futures. So now you have the entire yield curve available to you that you could trade. You could express an opinion on the yield curve either in an outright, depending on what duration you're interested in, or in the form of a spread, right? Bonds over notes is an example of a knob spread, they call it. And then you're hoping that the difference between the two changes in your direction would be a strategy. Underneath it, we're starting to track cryptos, micro Bitcoin. I got my eye on right now, relative, almost a brand new futures contract. But keep in mind, some of the ETFs now are using the Bitcoin at the CME group and the micro Bitcoin as part of their ETF strategy, investment strategy. So this is a case of, the cash market. I'm going to call it the cash market or the securities market using the futures as its basis. And I think that's a great thing. I think we're going to see some more volume in these particular products. It's really easy to trade from a functionality point of view. Might not be that easy to trade from a P&L point of view, but we're starting to track those, and those are going to be great markets. And at the end, I have finally, I'm talking about the commodity markets at the very bottom, right? This is how this whole thing started. Remember 1848, Chicago Board of Trade, corn, oats, cornmeal, soybeans, wheat. These are what all these symbols are. And there's typically a Z in front of it. And there's a reason why there's a Z in front of it, but I don't want to bore you with the history of it all. So these are the ones I'm tracking, and there's other ones. So every asset class is represented here. Another advantage of having a futures trading account with a broker. Anyway, let me just kind of slow down a little bit, take a peek at some of the questions. Somebody from Grill House, the HMB Grill House Web Factory. Hello, how can I see the blue lines on Ninja volume? All right, I'm going to get into the charts in a sec. Hang tight on that. I'll show you how to customize everything. It's really, really intuitive once I show you, and you realize how kind of easy it is. Looking over at the YouTube folks, you guys have been a little busy, a little chatty. Joe bought a trackball mouse. All right, we're back in the mouse conversation. Griffith spent $2,500 on 3-screen this desktop every 18 months. Now you could trade off of any $500 laptop, and that's a great comment, because how I want to expand on that comment is, yeah, you could. Your initial capital investment should be, in my experience and opinion, should be good. It should be good from the point of view of having good hardware, right? But the cost of this good hardware has gone down considerably in the last 20 years. So again, more accessible to participate. Griffin says, I haven't looked at Forex in years. Used to be a way to too big of a spread for me, right? So the bid-ask spread is what Griffin was saying is his experience. And Forex was kind of wider than 1 pip or 1 tick, and that adds to the cost of your trade. And it's been regulated pretty much overseas right now, so it's not as attractive as it used to once be from speculators. So Pam, great question. Pam says, why don't you still trade ZB? We don't do ZB presentations recently, but on my chalkboard is development of a ZB. She's talking about treasury bonds webinar. So we will get to it. We will get to it for sure. And maybe we could even take a look at it more on our Tuesday, Wednesday, and Thursday trading events. Okay, so we've covered the control panel a little bit. We'll talk more about that more. Trading ladder, market analyzer. And here's the chart. Actually, before we talk about the chart, let's talk about margining, right? So in futures trading, margining is different than in the equity world, right? If you want to have a margin account in in a stock account, as an example, you're borrowing money from your broker. You're paying interest on it. You're borrowing money from your broker. Here, the word margin refers to the amount of money we have to allocate within your account, within the existing cash you have, to place a trade, right? So you're not borrowing any money. You're not wiring this money anywhere around. It's really an accounting exercise. So let's take a look. So right now we have this. We have the MES, and I'm just going to go ahead and sell a contract in my sim account. Don't follow Home Alone. I'm just making this up. And remember, I sold on purpose just to demonstrate, hey, in futures trading, you could sell instead of buy, or you could buy instead of sell. And I'm going to take a look up here. I have my cash value, 9,275. See in the upper left here in my control panel in my sim account. I did this. I'm sorry, my bad. I did this in the big. All right, this is even better. I did this in the big S&P market instead of the micro. So let me just kind of change my chart. I have my chart linked to my quote board. I'll show you how to do that also. Okay, so its pricing is the same, right? It's all kind of together. It's all similar. I got sim account here. I want to make sure I have my right sim account here. And let's do that. Okay, so now everything's in sync. I'm going to hide my chart trader hidden. Now it shows my position. I'm short one, right? It's red. It's color coded. Here's how many points I'm losing right now. It's red. So it's minus 1.2 or minus 1. Remember, $12.50 a tick here. And each tick, there's 4 ticks in a point. So each point is worth $50. Right? And you can see my P&L moving around in real time, mark to market. Here's where the market is. Here's where my short position is. I want the market to go down, not up. So I'm losing money right now. I'm down $87.50. Now we're down more, right? So back to the margin though, and I'm using intraday margin is really, we call it day trading margin, right? It's assuming I'm going to liquidate my position before the end of the day, within the same session. And for this particular market, typical day trade margin between brokers is usually around $500 per contract, right? So of my cash balance, I'm using $500 of it for my margin to have this position on, right? And so my excess intraday margin is $500 less than my cash value. But I also have to factor into my unrealized P&L, right? So if my unrealized realized P&L is negative, then this excess intraday margin is going to be a little less. If it's positive, it's going to be a little more. Okay, so that's part of the equation there. And you could see, with a $9,000 account, I have plenty of excess margin still. I'm only using one contract. The next column over is called initial margin. Think of this as overnight margin. This is set by the exchange. The day trade margin is set by your broker or your FCM. And this trade is getting away from us pretty quickly here. The initial margin is fixed by the exchange, and it does change from time to time, but it's a lot bigger than the day trade margin, and it's assuming you're going to hold a position overnight, right? So it's saying, hey Jim, if you're going to keep this position past the close, which ironically is only 1 hour long, then you have a negative excess margin, or you can't do it. You don't have enough money to carry this position over. Please liquidate your position before you get there. And so, okay, so now with this amount of money, I can only do day trades for this particular market. All of the initial margins are different based on risk assessment from the CME group, and all the different asset classes have different margins assigned to them. And the micro E-mini is going to be 1/10 the size. And I'll toggle back over there so we can see that in action. Net liquidating value is just, hey, how much money you're going to have in your account if you get out of your position now, where this yellow marker is. That's the last traded price, mark to market. It's called 45.82 mark to market. And of course, it's moving around like crazy. Realized P&L is based on trades I've already made today, right? You can see in my other sim account, we have a realized P&L there. That we did that in our live trading event this morning, our live trade setup event we had this morning at 10 o'clock. Everybody's welcome to come to those. Those are Tuesday, Wednesday, and Thursday, by the way. Unrealized, again, I have an open position now in this particular account. It's negative $125. Total P&L is minus, since I don't have any realized P&L over here, it's minus the same as unrealized. Okay, any questions on that right now? Because I'm going to add to the confusion a little bit. And it's not really confusion, but I'm short a contract, right? And if I wanted to sell another one, right? I'm short a contract. If I wanted to sell another one, let's just put a limit order in. Now, I'm not filled yet. I'm hoping to get filled at 84 even on my example. You could see my intraday margin doubled, right? Because I have the potential to be short two contracts. Excess intraday margin is less now by that amount, and it takes into account limit orders to create a bigger position. Initial margin hasn't changed because right now, as far as the CME knows, I'm only going to carry one position over because I only have one contract on. Once I get filled on this second contract, if I get filled on the second contract up here at 45.85, then my initial margin will double to 24,200. Okay, I'm going to go ahead and just get out of this position right now. I'm just going to try to buy one back, which I just did. And you can see the unrealized is gone now. I'm going to cancel my second unit, and unrealized has pivoted over to my realized plus unrealized equals total. And that 50 then is added to my cash value. Now, the other thing that's really important is my intraday margin now is back to zero. My ability to place another trade now is immediately freed up. I don't have to wait for a settlement. I don't have to wait to close a position and for a 3 to 5 day settlement in Forex, or for a 1 to 2 day settlement in my non-pattern day trade account with Fidelity. I don't have that inconvenience right now. I can go again. I still have margin money. The ability to allocate margin money in my account. Okay, how are we doing here? Am I going too fast? Are we okay for the new folks? Let me know. Let's pivot over though. I do want to pivot over to the micro ES right now. So the MES again. And I want to go ahead and I'm just going to right click and I'm going to buy a contract with on the chart. I'm going to throw a limit order in there right now. You can see my label now. We're close to entry. Let me just expand this a little bit better. 68. All right, so we got filled. We're long one contract right now. Let's take a look at the intraday margin. It's only $50, right? It's 1/10 smaller. Multiplicative math, plenty of excess margin. My initial margin now, again, 1/10 smaller. So now if I wanted to hold this position overnight, I certainly could. My excess and initial margin is way higher than I need. So I'm in good shape here. One of the advantages of when I say, the micro contracts are now really lend to futures trading to be accessible to just about anybody. This is one of the main reasons, because you might decide it's in your best interest to hold a position for a longer period of time. Maybe you're not going to be a day trader. Remember, there's a couple different classifications of trading, right? There's day trading, where you're in and out of a position during the same session. Maybe I've seen day traders that are in and out of positions, lots of positions throughout the end of the day, right? But at the end of the day, typically the day traders are flat, right? Flat means you don't have a position anymore. And that's kind of number one. Number two is swing trading, right? People trying to take advantage of swing highs and swing lows. And, let me just pull up a daily chart in the ES right now. We have A, B, C, D, E. We have a wave thing going on here. And so a swing trader might say, all right, I want to buy it here, and then I'm going to wait for several days, and then I'm going to sell it, and I'm going to wait for several days, I'm going to buy it. And that's called swing trading. And swing trade could be within the same session, or it could be overnight, or it could be several days, or it could be a week. Last category is position trading, where, hey, I want to invest in the E-mini S&P, in the S&P 500. I want to buy an E-mini S&P contract right now and hold it because I think we're going to eventually make new highs by Christmas or the end of the year. I don't know if that's true or not, but you might think that, and it might be true. But then I would just take the position and hold it and wait. That would be a position trader. So there's three different kind of classifications there. Excuse me. on when you want to do it. So my whole point is now the micros make it easier for me because I could have a smaller size account. My initial margin is only $1,210. So if I had a $2,500 account as an example, I'd be able to do this. I'd be able to hold this for quite some time, is my guess. Any event, so I see the word margin call floating around here. So a margin call, when you have a margin deficit, right, at the end, most softwares won't let you get a big margin deficit if you're based on your intraday margin. But from an initial margin point of view, if you end up at the end of the day with a negative excess initial margin value, that's saying you don't have enough money to carry this position overnight. If you do, which is bad, everyone gets mad at you. Everybody. Exchange gets mad at the FCM. The FCM gets mad at the broker. The broker gets mad at the customer. Then you're on margin call. And a couple things could happen. Some brokerage firms will try to liquidate. Might liquidate you before the end of the day. You could, or you're going to have to add more money, or you're going to have to liquidate your position on your own. There's options to solve this, but you don't want to do it overnight because when the reason people get mad overnight is literally the FCM that is ultimately holding your trading account then has to put up the excess initial margin deficit for you overnight. And if it's just a couple $100, you might say, well, that's not a big deal. But if you have hundreds and thousands of customers on margin call, the FCM does not want to put up money on your behalf because they're not putting a trade on. They're not going to benefit from the profit. You are. So that's when the margin call comes in, and you just got to be kind of cognizant of how that whole process works. Hopefully I explained that not too poorly. All right, let's take a look at the chart now and how the functionality works here. It's pretty cool. Wow, this market is strong. So I have an order in right now. Here's where my position. It's 77 and a quarter. Market's appreciated up. We're doing well on this trade idea. If I wanted to, let's say, hey, I think we're going to make new highs, so I'm going to go ahead and I'm making a trade up, put an order to sell. Again, it's mimicked on the ladder. And then, to complete the anatomy of the trade, we'd put, a stop order. And in this particular case, I'm just going to put my stop right above my entry and see if we can get some good results. Stop. I'm going to use a sell stop market. And so if the price comes down to where my pink label is, it's 78 3/4, it's going to trigger immediately an order to sell a contract, which would offset my long position here. Right, would offset my long position. So whichever one of these things, this is the anatomy of every trade you ever see, right? And it's best practices, sorry about that. But you have a position, you have a profit target, and then you have a stop loss, right? And sometimes it gets a little more complicated because maybe you have multi-target stop loss, maybe you have a multi-target profit target if you have more than one unit on. Right now in my example, I just have one unit or one contract on. And that's kind of that. I mean, that's how it works. Charles, there's two ways you could use trailing stops, right? You could manually trail your stop. I could just kind of move it up here like that. I just trailed it up just now. Or you could use the automated trading strategies we talked about here to do that. And it's kind of beyond the scope of today, but yes, the answer is you could automate your trailing stop through that process. Great question, though. So Joy says, well, how do I know when to buy and let it ride? Well, that's a good question. And that's traders have been exploring this question since the time of dinosaurs, maybe. I don't know, but we do explore that in detail on Tuesday, Wednesday, and Thursday live trade setup events. So Joy, I don't know if you've been to those, I think, before. I would come to those And we do those together. So we do those together, and it's my technique is different than maybe other people's techniques, or maybe it's the same. I don't know. That's the one thing about trading futures is unique, right? It's a unique value proposition. Everybody's personality gets involved. Thank you for that, Isabella. Isabella's putting all right. So we got stopped out on that trade, and I'm gonna go ahead and just cancel this order here by clicking on the X. And we got a fresh slate right now. So let's just take a look now. Let's explore that question a little bit more. I have a few tools on my screen right now. And again, today, ever since Friday, we've had kind of a unique paradigm of this market, given this unique volatility. VIX is encroaching on 30 bucks. Maybe it's higher today. I don't even know. Volatility index. And the COVID variant is freaking everybody out, which makes sense because it's creating uncertainty in the marketplace. Uncertainty drives price. This battle between supply and demand that happens in these marketplaces. Chart, candlestick chart. There's all types of different types of charts you could use here. You could use a box chart. You could use a line and close chart, mountain chart, open, hello, close chart, which is really the same as the candlestick chart with the bodies filled in. And then you could adjust the spacing and stuff like that. The drawing tools here, I have a Fibonacci retracement on my chart right now. You can see that 0 of 23.8%, 38.2%. It's just a drawing tool where I could apply these ratios, and all this other stuff is trend lines and things like that. To add an indicator, I'm going to right click on my chart, and I'm going to get this mini menu again, and I'm going to click on the indicators option, which is the fifth one down from the top. And it's going to open up a dialog box. This dialog box on the upper left hand side has all of the available indicators on it, right? There's all sorts of usual suspects, some unusual suspects. And then once you go ahead and add, or you apply something to your chart, it'll show up down here in the configured section, right? So, I highlighted CCI. I clicked this little add button on the lower left. It added the CCI. This is the commodity channel index. I could click on that. I could customize it. I could change the period of it to a different period. I like to change it to 20. Default might be 14. I don't know. And then colors and all that stuff you could do as well. Same with the moving average crosses. I have a simple moving average on my chart of 26 is my slow moving average, 6 is my fast moving average. I have them put on a panel 3 below my chart, so it doesn't interfere with the actual candles themselves. I can still get a sense of what's happening, and totally customizable. I could change 6 to a 16. I could change the color, the width, all that stuff. So that's that part. That the indicator part's really easy. This is called volume profile. This is the other, in addition to the trading ladder, this is also a unique feature in trading futures. This is what each one of these histogram bars tells me what the volume is that's traded throughout the day at any given price. And let me show you how I have mine set up. Again, right click, indicators. And I'm going to select order flow volume profile in the bottom left, order flow volume profile. And I'm calculating the volume on each tick. And my ticks per level is 4, right? So what I'm doing is I'm calculating the volume that's traded in bands of 4, right? In bands of 4. And that makes sense because the E-mini S&P is literally a quarter. 1 tick, 4 ticks equals 1 point, right? So it's an even math. And everything else I'm leaving the same pretty much, other than I'm scrolling all the way down to the bottom and clicking show volume labels. And let's take a look at what that means. So let's take a look at what that means. Let me just kind of adjust this chart a little bit. Now, you could see each histogram bar. Again, the height of each histogram bar is 4 ticks high. And every time a trade happens in that 4 tick range, we're going to get accumulation of volume in the histogram bar, and the bar is going to get longer. bar is going to get longer as volume accumulates. And this is an ongoing process. I have mine set up for a 23-hour trading day. And I'm literally just watching these volume bars. And what it's telling me is where buyers and sellers more often agree that there's a fair price, right? Buyers and sellers, these transactions, and they're not calling each other up and talking to each other, but electronically, the electronic matching engine is matching these buyers and sellers up together on a FIFO first in, first out basis. And over a period of time, we see a profile, right? We see a volume profile and say, okay, where is the market happy? Where's market happiness? And it also gives us areas of interest. Now, again, today's a little bit of a unique day, given the huge range we have and this whole COVID thing, but dark blue in the middle, remember your high school math, is one standard deviation of what's typically a normal Gaussian distribution or Gaussian distribution. It's not always like that. Sometimes it's jaggedy the way it is. Sometimes it's a P distribution. Sometimes it's a B distribution. Sometimes it's a double distribution. But this dark area here is one standard deviation worth of volume. The light blue, price is above value. The light blue on the bottom, price is below value. The dark blue, obviously, we call the value area. One standard deviation of the value area. The gold bar is simply the longest histogram bar of the day. Not a lot of magic to that, other than it's where the most volume is transacted throughout the day. Point of control. And oftentimes it acts like a magnet. It doesn't always, and it doesn't look like it's doing that today, but it gives us an area of interest. So that's a price of interest for me, 45.40. Top of the value area, the transition between value and prices above value, area of interest, 64.50. The bottom transition between value and prices below, area of interest, 26.50. That, in combination with my fib line, helps me come up with entries and where I place my stop. The indicators I have down here, I have an oscillator. Any oscillator will do. This is the one that I like, that I follow the most, the commodity channel index. We're above zero right now. It oscillates around a zero line. There's an equation that somebody came up with for this. There's an upper band, a lower band, and we oscillate around the zero line. And I tend to look for velocity. I tend to look for the steep slopes associated with the moves in the CCI. Gives me an idea of momentum. And when the slope is kind of parallel, kind of sideways like it is right now, it's telling me the momentum is a little slower right now. And of course, it could change. It's a lagging indicator, but it gives me some more information. Moving average cross, the red one is fast moving average. My blue one is a slow moving average. It's kind of going parallel right now. The difference between the two is almost 30 handles, 30 points. We call a point a handle in futures trading. And then at the very bottom are just regular volume bars. Every 10 minutes, it just tracks the volume. That's all. So, we go through a very deliberate process on a Tuesday, Wednesday, and Thursday events to actually, kind of check out the structure of these candles along with all this other information and come up with trade ideas. So I encourage everybody to join and come with that. Trading hours, Sunday night. Let's talk Central Time. No, let's talk East Coast time. Sunday night, 6 p.m. Market opens up all night, all day, closes at 5 p.m. Monday afternoon for 1 hour. Opens up again at 6 Monday night, goes all night, all morning, all day till Tuesday at 5 o'clock in the afternoon. Closes for 1 hour. This cycle repeats itself all the way until Friday. Friday close, take Friday night off. Take Saturday off, take Sunday morning off, and then you can get back at it on Sunday. Okay, so a couple questions. Hunter, do I do one-on-ones? No, but I encourage you guys to come Tuesday, Wednesday, Thursday. Why do you use the 10-minute chart instead of 2,000 tick chart? I see a lot of people using the 2,000 tick chart. So out of curiosity, who do you see using the 2,000 tick chart? Who are these people? Is this a chat room you subscribe to or a guru you follow? I'd be curious to know that. So I use a 10-minute. I'm not a tick chart. I'm not an expert on tick charts. I've tried them. and I have better luck with an intraday time period. And here my intraday time period is 10 minutes. And here's how you guys know what the time frame is, and you could change it to whatever you want. But this is a 10-minute chart that we're looking at right here. And Ninjatrader software makes it really easy to kind of do any kind of time-based chart or tick-based chart that you want. It's very easy to do. So here I like to look at a 10-minute chart, and I'm thinking in terms of an hour, right? I have a multiplier of 6 in my head, and I want to make my decisions based on the structure of a 10-minute chart with the idea that I want to get in and out of a trade anywhere from a minute to 60 minutes. Right now, sometimes you get stuck in a trade longer. That's okay, but that's my thinking. And my thinking is, if I was making the decision solely on a 30-minute chart, then my time horizon would be 3 hours. Right now, I have a 30-minute on my other screen. I have a daily chart on my other screen. I do look at other things, but from what are the candlesticks doing now, and what's realistic, and what are the wicks telling us? What are the tops of the candles telling us? That kind of analysis. It for me is easier on a 10-minute chart. So, but whatever style works for you, works for you. Like I said, trading is a unique individual thing. Unique individual thing. Yeah, you can get a demo account if you haven't already. Just go to the Ninjatrader website and sign up for a demo account. Very easy. Lewis says, one will never be a good trader by bouncing around different markets. Well, bouncing is bad for sure. Becoming an expert in a market or 2 markets or 3 markets in a specific time frame, I think, is a good strategy, because you could develop market muscle memory and become good at that particular thing, as opposed to trying to be a jack of all trades and just looking for the biggest candle and trying to make decisions that way. So I kind of agree with you on that. Joseph's an NQ trader. Welcome, glad you're here. And we do some I can't believe I just said that. Micro NQ trade ideas also Tuesday, Wednesday, and Thursday. Feel free to join us there. Well, Demo Trader asks another $1 million question. Why are the moves on the ES so unpredictable? Well, right now we're in a very volatile period of time, and in my opinion, the underlying instrument here in the stock index futures are the 500 component companies that have prices that represent the S&P 500 stock index price, and I think by design, equity markets are designed to appreciate over time. Now you'll have some values companies that pay dividends instead, and the prices really don't move that much. Those are more mature entities, but generally speaking, they try to grow earnings, they try to grow value, they try to issue new products. And so as a general matter, I think that the bias is positive. This is my opinion. However, the unpredictable nature of it, we talked about this morning, really pricing is like a river. You don't know where it's going to flow. Right? You're in a canoe, you're going down the river, it's winding around. And instead of winding around based on the geography of the ground or the valley you're going through or the mountain you're going down, we're moving around based on supply and demand. That's it. Buyers and sellers are deciding as a collective, whether you're an institutional trader, a money manager, maybe like a commodity trading advisor or something like that, or whether you're a hedger, right? You're protecting the value of another product or an underlying cash instrument, or you're a speculator, which is, I think, most of us are doing. It's that supply and demand battle that happens, right? And we saw it with crude oil today too, from a commodity point of view, where sellers just jumped on board saying, "Hey, OPEC's going to start, increasing production. Prices are going down. I'm going to start selling the futures." Right. So you have this whole kind of this massive entities. Nobody's bigger than anybody else. Nobody's big enough to move the market. I mean, I would put an asterisk there when we're talking about the Federal Reserve Bank, because they do have the ability to drive things certain ways. But that's the United States government, right? So other than that, from an intraday trading point of view, pricing is just simply supply and demand, and More people that express a bullish point opinion is going to elevate the market. More traders express a bearish opinion is going to move it down. And I know and that's the whole thing. You can't predict it. It's very hard to predict. My indicators are lagging indicators. So we try to look at market structure, candle structure to identify what people are thinking, what traders are thinking. Okay. Where are we at? What time is it? We got time? We're over time. That's all right. I don't care. So like somebody, an Ninjatrader kicks me off, we're fine. They won't though. Justin asks, what's the numbers in the buy sell columns on the Superdome represent? Okay, so we talked about it earlier. These numbers here, these are literally limit orders that have already been sent to the exchange. So 45, 75 and a half, you see 52. There's 52 contracts sitting in the order book at the CME Group waiting to be filled, waiting for the market to come down there and trade there so these traders could buy contracts there. The opposite's true on the right-hand side. These are orders that are sitting there to the traders have sent to sell a contract at whatever price you're interested in here. This is 10 ticks deep, right? Depth of market, 10 ticks deep, level 2 view. Don't need to have a pattern day trade account to do this, right? You don't have an uptick rule here. And, just a couple of the benefits right there. And there isn't really a regular trading hour session or an extended trading hour session. There isn't anybody selling order flow. So this is really a pure way to trade. I'm a big fan, obviously. I'm in this business, but I'm a big fan anyway. And that's kind of, I guess that's my answer. So, right. So Griffin just kind of said it a lot more simply than I did. More eloquently, I'll say is, it's the bids and the offers, right? The bids and the offers. All right. Well, okay. So Joseph, great question. Great comment, Joseph, right there. I would think with ES, there would be more than 52 contracts on the bid. And typically in ES, in a regular day, these are going to be in the hundreds. The bids and offers are going to be in the hundreds, not in the double digits. And the reason I think it's less than that now is because of the tremendous volatility we've had in the last few days because of this COVID thing, right? I mean, the Dow is up 625 points. That's unique. S&P is up almost 70 points. That's unique. So when you tend to have a really volatile market, a couple of things could happen. One, it's not unreasonable for a bid or an offer to be placed above your vision at 82, right? I don't know how many people were there ahead of me, but at 82, there is for sure, orders in the book. I'm not the first one, right? So this order is still valid, right? So we're just seeing 10 ticks deep. That's kind of number one. I think these orders are further apart to take advantage of the natural volatility. And I also think traders are a little bit more deliberate and are acting quicker. And that's why you see the prices move a little faster. Again, it's my opinion based on what I've seen over the years. So time and sales is something, it doesn't help me. And so I would not be helpful going over time and sales chart, but basically it's a different view on seeing orders that are coming through, sizes of orders that are coming through. And it just happens so fast, especially today, happens so fast. I almost find the data that comes through so quickly. It just doesn't give me a good idea what's going on. So let's see, where are we at here? Yeah, Hunter. So they're also in the Zoom link that Isabella cut and paste earlier today. So you could get links to all of these. There's many more events than I just do. I mean, there's really smart folks at Ninjatrader that do other events as well that are listed on that event page. I'll have Isabella cut and paste that platform training page in again, so you can just click on it and see what they all are. So Tuesday, Wednesday, and Thursday is 10 o'clock start time, East Coast time, ET, East Coast time, 9 o'clock Central time. Ron, contact me through the question and answer box like you're doing right now. That's the best way. I'd be glad to try to pick off questions as we go. And again, if you keep coming to the events, that'd be awesome. Okay, let me scroll back up here. Just to make sure I got everything covered here. And I'm going to take a look at my notes. I do have notes. I kind of blew them off today because I think I covered everything anyway, but let me double check. So Lewis says, by the way, I only trade market orders, no limit or trading for me. So I don't necessarily, I'm not a fan of that because you're giving up the bid-ask spread, right? You're buying at the market. If I buy at the market right now, I froze the dome. If I want to buy at the market right now, my purchase price, the best purchase price I'm going to get is 75 3/4 in this frozen example. So I'm paid $12.50 for that trade, plus my commission, plus my exchange fee. If I put a limit order in and I'm a little bit more patient, maybe I'll get the 75.50s. I won't pay the bid offer spread, and I'll have a better price. Now, the downside of joining the bid that way is you don't get filled, right? And you don't get the trade. So that's the trade-off. But in my experience, it's better to be patient, let the market come to you, at least on your entry, kind of break even on that bid-ask spread. That's, again, based on my opinion. And it doesn't, if you're trading other markets too, same comment. My comment's still good. Yeah, Craig, you could set alarms. There's a lot of alarms. we could be alarming at NinjaTrader. And again, we'll take a look at that in more detail when we have time in the regular trading events we do. Okay, I think we're good here. We've covered a lot of ground today. I appreciate everybody's time today. I do want to remind everybody trading futures, options on futures, does involve substantial risk of loss, not suitable for all traders and investors. Careful with the day trade margins, risk capital only. And my advice is to be patient, take your time, and don't overdo it. This takes some work, and hopefully you could be successful at it. And I think that's it for today. I do want to wish everybody a happy weekend. Feel free to come to any event you want. If you're up to it, appreciate the thumbs up on YouTube. That would be a huge favor. I really would appreciate that. And let's check one more thing. All right, so we talked about the market thing already, Joy. Okay, good. Finally, hopefully we'll see you next week. Off tomorrow, nothing going on tomorrow for me. Hopefully we'll see you next week. There's probably some different events that are going to be published next week as well. And I would like to tell everybody, please be safe out there and be good to each other. Thanks for coming.